Good morning, class. Good afternoon, good evening, depending on the time of the day or the night you're accessing this recording. Today, we are covering Learning Unit 4, an introduction to managerial accounting. It is going to be about two things: the costing of a product and the break even analysis. From the introduction, you can read that one of the biggest mistakes that a business can make is to calculate the cost of product it manufactures incorrectly. If all costs are not calculated and included in the cost of sales correctly, the selling price of the product will be too low. And this, in turn, will impact the profitability of the business. This is where managerial accountants come in, right? So, managerial accounting differs from financial accounting. And as you can see from the notes I've provided, managerial accounting provide information to internal users of information, especially managers, right? Managerial accounting. Managers definitely will be the primary users of that information. Financial accounting provide information to both internal and external users, especially investors. So the financial manager has to ensure that all costs are taken into account when calculating the cost of sales. And that's what we're going to do in this learning unit is that we're going to look at the different costs, production costs, non-production costs, fixed costs, variable cost. And in the second part of this learning unit, we're going to look at the break even point, which are used by financial managers to determine how many goods have to be sold in order for a business to be run on a profitable basis. So, this concept is introduced to understand the relationship between cost, volume, and profit. As per the notes in red, as you can see, there is two main costs that you need to understand: the production or manufacturing cost and the non-manufacturing cost. Let's delve into the production cost. Production cost or product cost, manufacturing cost, all these are synonymous. They refer to cost or expenses that are incurred by a business when it converts material into completed goods. So you have the transformation of material into complete goods for resale, right? Therefore, you would have the direct costs, which are costs that are directly traceable to a cost object. For example, the wood that is used to produce a table, it's directly traceable to the table. And then you have indirect costs. These are costs that cannot be traced directly to a specific cost object. For example, that will be the salaries of factory cleaners. It is not directly linked to the actual table that is being produced. So for these manufacturing costs, they would include the direct material and the direct labor. So direct material and direct labor cost, very important. And under the same manufacturing cost, you're gonna have those costs that are indirect costs. They would be under the manufacturing cost, but they are not directly falling under the direct labor or the direct material cost, right? So, to make it simple, manufacturing costs consist of the following three elements: direct material, direct labor, these are direct costs, and then manufacturing overheads is an indirect cost. So, any cost that is indirectly related to the cost object or indirectly traceable to the cost object is what we understand overhead, the manufacturing overhead. Still under the same umbrella of manufacturing costs. Remember, everything is about converting the material into completed goods. This is where I love to use the economic term of input, transformation, output. Input is converted into output. So thus you can understand very well because it does touch to the your economics module. So we bring the inputs that would be our direct materials, our direct labor, the people who are going to transform this material into finished products. For the direct labor, it is also known as the touch. The touch. So we are specifically talking about the workers who are directly involved in the manufacturing process. So that's why we understand by touch labor. So the direct labor workers usually touch the product while it is being produced. This is not the same as other workers. So it would uh, exclude your supervisors, your managers, your cleaning team, your security staff. They are not directly touching the product. So I trust this is very clear. And the direct material, it form an integral part of the finished product. For example, when you're using wood for the table, you can look at the table and you can see the wood that you use. It form part of that table. But this is not the same. For example, this is not the same for glue, nails that are used, so you won't see them. They visibly they not, or they are such in small quantities that you cannot easily identify them in the finished product. So like I said, that would be glue, that would be paint, that would be lubricant. They might be visible, but such as paint, it might be visible. You can see that the table was painted, but you cannot trace it to a single unit of production, right? Because you're going to use that paint on many tables. So it is not easy to trace it to a single product. The reason why I've spent enough time on this is this will be very crucial for the rest of this module. If you start understanding the differences and the nuances between these, this will make your life much more easier. So here is my encouragement for all of you to go again and have a read by yourself and make note also your own notes, but I have provided some clarity on the distinctions between the different costs. Let's also now look at now those indirect costs, right? Those manufacturing overhead. What are they? So you must remember that these are still manufacturing costs. They are not outside the actual production or the manufacturing of of the product. They are just not traceable, directly traceable. That's why we call them indirect, directly traceable to the actual product that is being produced or the finished product, right? So only manufacturing costs are to be included in this category. I need to be clear. Administrative, marketing, distribution costs should not be included in this category. That they form another category because marketing or administrative or distribution costs have nothing to do with the actual production or manufacturing of products. So we are talking about indirect costs that are not traceable directly to the cost object, right? So you could, among those costs, you would have indirect labor, indirect material. We already touched on things like glue, lubricant, small nuts and bolts, polish. So these sort of things will be what we call indirect materials. Indirect labor, you would have, for example, the payment that you have to give to supervisors, the cleaning of the factory, not the administrative building, not the offices. So you understand here, when we're talking about manufacturing, we are looking, for example, at a plant, at a factory, right? So the cleaning of that particular plant or factory is form part of the production, but it's just not directly traceable to what is being produced. So I trust this is very clear. Security of the factory, not security of the offices, right? Of the actual factory. We need to somehow correlate this cost or link this cost to the actual production, right? So other employees that do not touch the product also need also to be taken into account, right? They do not touch the product, but nevertheless, they are employed in the factory or in the production of the product. So I hope we understand each other. So when we're looking, we can look also at things like the rent paid, but obviously that rent needs to be related to the factory itself, not general rent that is being paid, but what is the portion of the rent that is related to, for example, the factory, right? So you would have also maintenance of machinery and equipment. These will be definitely indirect costs, and they need also to be taken into account. You would have depreciation of the equipment, right? So you have a you have factory equipment. The depreciation of those factory equipment is a cost that you need to take into account. Nothing related to the administrative building. I repeat again, this is about factory equipment, things that we are using in the production. Insurance that is related to the plant, to the factory, to the equipment in the factory, right? Quality control costs. Water and electricity, obviously, that is related to that specific manufacturing, right? So these are all indirect costs that you need to take into account. But they are all under the umbrella of manufacturing cost. Because if they are not under the umbrella of the manufacturing cost, we call them non production or non manufacturing costs because they are outside the actual manufacturing. And among those costs, you would have two categories. You would have the administrative cost, and then you would have the marketing, distribution, and selling costs. You see that when the product has been produced, it is finalized. Now we want to take that product and put it in the hands of our customers, right? So there will be other costs that are involved. We need to do marketing. We need to distribute. We need to deliver those products to our customers. This speaks about different costs than that are not related to the manufacturing per se. Administrative costs will be related to the general management of the organization. All right, so organizational, executive, clerical cost, and the marketing, distribution, and selling costs, we can resume it as the order gating and order filling cost. Like we said, we want to get this product in the hands of our customers. All right, so please do your due diligence and do your reading on this, and we shall now touch on the product cost and the period cost, right? So that will be in our second part.